All right, welcome to the deep dive. We're plunging into one of the most exciting shifts happening right now, the digital asset space.
Yeah, it really is moving past just speculation.
Definitely. It feels like it's evolving into something, genuinely foundational, maybe even revolutionary.
And what's really driving that, I think, is how the market's maturing. We're seeing real catalysts
Right,
now.
the new ETFs, right?
Exactly. Regulated investment vehicles like those, plus uh, a bit of a thaw in the regulatory climate, maybe. And you've got big global finance players actually getting involved, seriously involved.
So this isn't just theory anymore.
Not at all. It feels like a new era, like real institutional integration is happening.
Okay, let's unpack this then. Our mission today, for you listening, is to try and cut through all that noise. We're looking to pinpoint the projects, the sectors that look set to really outperform in, say, 2025, 2026.
Show you where the real value is being built.
Exactly. So when we talk about a revolutionary project in this new landscape, what does that actually mean? What are we looking for?
Yeah, good question. It's definitely not about that short-term hype anymore.
Right.
Truly revolutionary projects, they're the ones creating like new decentralized markets or solving really fundamental problems.
Okay.
So you need obviously sound technology, real utility, strong teams are key with significant partnerships. Think big names, maybe like an Apple or AT&T getting involved eventually with some networks.
Wow.
And then robust tokenomics, clear ways value actually comes back to the token holder, plus a vibrant community. That combination creates this sort of flywheel effect.
Ah, the flywheel effect, that self-reinforcing thing where more network use drives token demand, which pulls in more growth.
Precisely. So keeping those criteria in mind, what's our main thesis for outperformance for the next couple of years, 2025, 2026?
Well, yeah, because AI, obviously, huge long-term potential. Everyone sees that. But our sources seem to be pointing somewhere else for the more immediate future.
That's right. While AI is, undeniably a massive long-term disruptor, the thinking is that real-world assets, or RWA, and decentralized physical infrastructure networks, DePIN, those sectors are maybe better positioned for the most significant immediate outperformance.
RWA and DePIN. So why those two specifically?
That's the key question. And the sources highlight really three main factors.
Okay, what's the first one?
First up is institutional compatibility. RWAs, things like tokenized U.S. treasuries, they're incredibly familiar to traditional investors.
Makes sense.
You've got projects like Ondo Finance with their OUSG token, basically tokenized treasuries already being used by giants like BlackRock.
Yeah.
Or Centrifuge, bridging traditional business finance with on-chain credit.
So they're tangible yield-bearing assets that fit easily into existing portfolios. It makes crypto accessible.
Exactly. Easy to understand, easy to integrate.
Okay, so that's compatibility. What about the second factor? How do they actually generate, tangible value?
Right, this is where the utility piece really comes in. DePIN projects. Think Render for decentralized GPU power or Helium for wireless networks. They have really clear, direct paths to on-chain revenue.
How so?
Well, their token value is often directly linked to how much the network is actually used. Render, for instance, has this burn and mint model. Using the network actually burns tokens.
Oh, interesting. Creates scarcity.
Yeah, direct demand, direct scarcity. Or look at Helium. They have the partnership with AT&T. The more people use the network, the more demand there is for the AT&T token. It's a very direct link.
Okay. Clear value accrual. And the third factor you mentioned.
That's the regulatory trajectory. It seems to be shifting more favorably for these types of assets, especially looking towards 2025, 2026.
How so?
Well, the anticipation is we'll get more regulatory clarity in the U.S., specifically around asset-backed tokens, stablecoins too. That clarity could provide some serious tailwinds for RWA first, and probably DePIN following close behind.
Reduces uncertainty, encourages capital flow. Makes sense. Okay, so if RWA and DePIN are looking good for the near term, where does that leave AI? We hear about Bitensor, the Artificial Superintelligence Alliance. These sound massive.
Oh, absolutely. The AI sector, no question, probably has the highest long-term disruptive potential. Huge. But for this immediate 2025, 2026 window we're focusing on, it still feels a bit more nascent, maybe more speculative. The value accrual models, how the token captures value, they're still kind of solidifying compared to the direct revenue models we see in RWA and DePIN right now.
Got it. So different timelines, really. RDePIN for near term, AI for the longer horizon.
Yeah.
But are these just three separate trends running in parallel, or is there something more going on?
Now that's where it gets really interesting.
Yeah.
They're not really siloed at all. The argument is they actually form this powerful, synergistic like a super sector.
How does that work?
Well, think about it. DePIN provides the essential infrastructure, right? The data storage from Filecoin, the compute power from Render, basically the fuel AI needs to run and train.
Okay. DePIN feeds AI.
Right. Then the outputs from AI, maybe sophisticated risk models or analytics, they can directly enhance RWA products. Imagine an AI assessing the risk for a pool of tokenized real estate loans, for example.
I see. AI enhances RWA.
Exactly. And then connecting all of this, acting as the sort of central nervous system.
Yeah.
That's where foundational infrastructure like Chainlink comes in.
Chainlink, okay.
Yeah, there are services like Proof of Reserve, which verifies those real-world assets are actually there on-chain. And there's CCIP protocol for cross-chain communication. It securely links everything together. Physical assets, AI insights, different blockchains. They're already working with giants like Swift and MasterCard to bridge these worlds.
Wow. Okay, so it's not just separate sectors. It's an interconnected system, like a whole new on-chain economy starting to form.
That's the idea. A potentially massive feedback loop.
So boiling this all down, what's the key takeaway for you, our listener, from this deep dive?
I think the main thing is the market is clearly maturing. It's starting to reward real utility, things that institutions can actually understand and use. So based on this analysis, a strategic overweight towards RWA and DePIN for near-term growth seems logical. And maybe holding Chainlink as a core position makes sense too, given its role in underpinning this whole emerging ecosystem.
Makes sense. All right, and to wrap up, here's a final thought for you to chew on. Given this convergence, this powerful combination of AI, DePIN, and RWAs, how might this new on-chain economy reshape not just finance, but maybe other huge industries too? Think about industries reliant on data, computing power, physical infrastructure. What new possibilities does this actually unlock for you?